Alright lads, so this is a bit of an old video, basically how I got funded in one trade. So it's a bit of the old format and things like that, but I thought I'd fucking post it anyway, just cause I haven't been a bit active on the trading channel. I haven't really been doing the live streams. I'm sort of taking a little break from trading at the moment, but I thought if it does help someone, maybe it might be worthwhile to post it. And it definitely was when I was trading a little bit better and a little bit more patient. I had taken a break off trading, and then I tried to pass these accounts, and I had a good time doing it. So yeah, just a disclaimer, this is an old video, old price action, old market. Actually, it was running more pretty bearish towards the start of the year, I believe. But I made this video to post and I never posted it, so I thought what better time than when I'm currently taking a little break, as some of you know. And if this helps someone, hopefully it does. But yeah, appreciate you all. We'll be back soon. I'm just taking a little bit of time off from trading because I am retarded. Alright, so I want to start, or go through the 4 things that I outlined as being most important for passing these accounts first go around, and in general what's important to formulate, you know, a trade, especially in the prop firm space, and how I approach it. So number 1 is bias. So having a clear bias. You know, you hear it all the time from a lot of the bigger traders in the space. You know, Jade Cap was the first person that really implemented bias for me. Essentially, I had these accounts fresh on Monday, and I didn't take a trade Monday, Tuesday, Wednesday or Thursday, even though, you know, I did have a clear bias in terms of being bearish. But Friday, I actually saw this play out, and which I'll cover when I go into the charts. But essentially, second strategy, obviously having, you know, a strategy that works. I don't honestly operate off a set mechanical strategy. I do like intuition. I've sat at my desk every day for the last, you know, 500 days trading, pretty much all sessions. Not to say that that makes me a better trader. If anything, it's made me a worse trader, but it has allowed me to have a lot of screen time essentially, and be able to sort of understand how the market moves, or how it makes sense to me. Next thing, risk management in terms of, you know, the prop firm Evals. It's different for fundeds, but for me, I'm okay with risking, you know, 20 to 25% of the drawdown. So obviously I say funded 250k, but really you only have 2k per account, so it's about 10k of drawdown. I'm okay with risking about $400 to $500 per account, which is about, you know, 20% of the total drawdown across all 5 accounts. But if we just talk about one account, $2,000 drawdown, I'm happy to risk $500, and based on the setup, I might hold that for a 1 to 2, 1 to 3, 1 to 4. In this case, in this one trade, it was actually 1 to 6, because I risked about $550 and made the 3,000 for the profit target. Now, in terms of trade management, essentially this comes back and ties into your strategy and your risk, essentially. So for me, trade management is something that I've always struggled with. You know, I've changed how I trade recently. I only want to have, you know, 1 trade a day. I want to really pull back on how many trades I can take a day. I want to stick to my stop loss and TP. I don't want to really mess with break evens too much, or, you know, my favorite mentor, Trader Kane, essentially he's the GOAT. But yeah, not mess around with too many break evens, let the trade play out. Really, if there's a logical place that it shouldn't come back and test your entry, then I would go break even. But yeah, essentially these all tie together that allow you to take trades and, you know, formulate profit in the market. And risk management is obviously the most important in terms of keeping that, which is what I've struggled with the last year. But anyway, let's get into how I form my bias as number 1. So alright, so essentially framing a bias basically is quite simple. Intraday, the way I, you know, have been framing my bias recently is very short biased, obviously given everything that's going on economically with Trump and the tariffs and things like that, and also just from a common sense point of view that markets have to reprice at some point in the future. You know, since 2022, every sort of significant swing low has been protected to the upside, and essentially at some point when economic factors are fueling a down move and you have market structure supporting it, it's easy to, I guess, frame why shorts make sense and position yourself in that way. So, you know, the first time that we actually had a significant shift under a significant swing low, I'd say is here, where we've had two grouped together and we've closed under with a fair value gap and respected that coming away from it. So obviously up here, you know, you might be mixed for bias coming into the session, so you're just trading based on internal or external market liquidities or whatever strategy that you use, or whatever, however the market makes sense to you. But essentially after, you know, since March, the start of March, you know, we're in the middle of April, but the last month has basically been, for me, all short biased after we respected, you know, this weekly fair value gap. If we jump off and compare this 4-hour chart, you know, I like to look at NQ and ES together. Essentially, sometimes you might have cleaner price action on one versus the other. So yeah, every 4-hour gap on the way down has been respected basically until here, where we inversed this whole area. We didn't respect it, we came up, inversed it, retested an old 4-hour fair value gap, came back down, pushed a little bit below it, but then had this massive 12% day that, you know, I know that everyone was sort of spectating and trading, but I didn't want to take part in any of this Monday, Tuesday, Wednesday, because I don't really have an edge or understand, you know, a market that does a 12% day. I have no edge in that, or, you know, 2,500 points, I think it was. You can see here, you know, I don't have an edge. That never happens on NQ or ES. I mean, it's definitely an opportunity to make money, but I'm not at the stage where I can confidently risk on something like that. I don't have confidence in how it's going to work out. But essentially, forming the trade that I actually took to pass the accounts, we just work off this 4-hour gap, which we pushed into and closed into after that 12% day. So essentially, I didn't take the trade on Thursday, but this helped form my trade on the Friday. So we pushed into this 4-hour gap, and one thing I want us to note, which I noticed straight away on Thursday when I was at my desk, was SMT at these highs. Now, this was a trade that I wanted to take, but just given that we pushed up 12% the day before, I didn't want to get involved so early in the day, given how volatile the market might have been, or if there was any reason that we might have another 1,000-point, you know, move in Asia, which sometimes Asia recently has been moving amazing for me, being Sydney based, which I love. But essentially, yeah, you know, we had this SMT, a nice, you know, actual candle formation here in the 15-minute chart, which is something I like to trade. And then we just basically began respecting, you know, little 15-minute inefficiencies to the downside on both NQ and ES. So we were pretty bearish, as well as the one thing I noticed on the 1-hour chart, which, you know, I use a combination of a lot of ICT things overall. But essentially, if we just use this 4-hour gap on NQ, I noticed that every, you know, 1-hour order block on the way down was basically being respected. So bearish price leg, 1-hour order block, so 2 hours of retracement, push down, a couple hours of retracement, push into that, go down. This one closed below, rejected straight away. And what we actually did was come back into, you know, a discount of the whole 12% price move. So pushed up 12%, and then we started retracing and repriced 50% of that. So obviously from here, you can get a nice long setup, but I was still short bearish given the overall market sentiment. So I don't want to be longing in case this does just melt. I would much rather wait for a better entry. So if we use the 50% of this price leg, this is where I wanted to get involved above. The 50% lined up with this liquidity here as well. So essentially, coming into the day, I was looking to mark out this level here on NQ and this level here on ES. Yeah, dropping to the 15-minute time frame, in Asia, we had a pretty nice price action, if I'm going to be honest. Something I like to see is, you know, this inverse fair value gap here. We have the bodies respecting it on ES. So, you know, this did present, you know, a long setup in Asia, which I might have taken. But as I said, given how it was printing prior, usually I do like this V-shaped recovery, but I didn't want to take that. So I was patient all day. I went to the gym, came back, and we continuously pushed up, you know, all these 15-minute gaps. respected, then rejected, inversed, up here, began to drop back down, and then completely inversed this whole move and came for this liquidity up here. Now, coming into London session, which is something I like to trade, obviously I was short biased or wanted to short the market, and after we had this manipulation higher, I was even more confident to want to short into this. Now, obviously I wasn't right. We can see that we continued higher, but that's why timing is important with the market, because as you can see, the market will pretty much always offer the trade ID, which is something I've noticed. Come to this 15-minute fair value gap here, begin to reject. It will offer that ID to someone, and then it will deliver however it's meant to deliver. So came in here, rejected, came in here, danced around, then inverse. Now, after it's done all that, I'm looking to get short. I'm alright with being wrong above, Asia high pretty much. So although this is my Asia high because I trade London from 3 a.m, I'm alright with getting involved before if the price action makes sense. And the reason being is, if we can see here on the 1 hour, if I just go back to what I was talking about before with the order blocks, the price signature that we had here on NQ, so these red lines, obviously the 1 hour order block. So every time we closed below, we had wicks inside and rejected. Same thing here with this order block, came inside, we wicked it once and then rejected. Now, after all this price leg or price action in Asia, we've danced around and we've done the same thing. We came up, we wicked into it, closed under, wicked into it again and closed under, and began displacing down. And so yeah, essentially this is the trade that I took on ES. My entry was 5372, which I know is quite a sniper entry, and I can cover why this was my entry, or why I entered there. My stop was 85387, and I think my target was 85, so underneath this liquidity. So this was the trade that I took. This was my target. This was what I wanted to see here, given that it was 50% of this range, matching up with this liquidity here. So essentially came into here, I wanted to see us short at least into the 50% underneath this liquidity, and it just so happened that this price level, given my contract size and risking, was the amount I needed to pass the 50k accounts. So it was a 3k profit target, and I think I risked about $540. So basically, if I jump over here, I can go through my executions, which I posted on Twitter. So I'll show you the trade journal as well as the trade performance on the back end of Tradeify or Tradeify. But yeah, essentially, this is where I shorted. That was my stop. This was my target underneath the low at 5285. Essentially, if I go over here, this was the actual dashboard after I had taken the trade. So that's the execution. You can see here, I shorted 5372. My stop was above here, and I took my profit exactly at 5285. You can see here, this is where I had the massive pullback. So we legit wicked in and touched my TP, pulled all the way back. But given that I had no reason to exit, essentially we had come above the EMA, closed, rejected, had done the candle formation that I really like to see, especially on NQ with this doji formation here. You can see, every time we get a doji at a specific price level that I'm interested at, that gives me a reason to get involved. And it's quite simple, but yeah, this is how my trading has transformed recently. So given NQ's price structure, it gave me confidence that although we were getting a few, opposite or opposing candles printing, I was happy to hold it even though we had that pullback. And if I go over to this one, you can see that was my entry, that was my stop, and that was my TP. So, we pulled all the way back up here. I'd seen, $2,950 turn into 1,500. And usually that's a point where I would become emotional and just take the profit. And then the next trade I might take, and I might win, I might lose. But the worst thing is seeing your TP that was 3,000 not get hit, for you to close at 1,500, for then it to get hit later. So I just sat in the trade. It was the only trade I took in the accounts. If I go to my Tradeify journal here, you can see 15.1k, 5 accounts, 5 trades, 3k profit target across 5 accounts, MES, short, average entry 5372, average exit 5285, close time was this, so 2 a.m. it was about a 2-hour trade. I don't know if it will show that, and then my current eval counts, which I'm up to. So yeah, the first set of 5 I failed, second set of 5 I passed and became funded, and I blew those funded accounts recently after being up 1.5k, and then essentially, yeah, now I'm funded again straight after it with this new set that I just bought, and yeah, I'm excited. This was also my Tradeify dashboard, so this was one of the accounts here, which basically covers all of them. But yeah, this is just the stats behind the trade, you know, how much drawdown I sat in as well. So one trade, obviously 7 MES contracts, which was the appropriate risk for the setup. And essentially, yeah, basically over the course of the trade, how I got to the 3k profit target, minimal drawdown. Probably one of the best trades I've ever taken, to be honest, and the most patient, and clearly worked out. So yeah,